Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week, Wednesday morning. We are coming to you as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surbi and Mangalam joins us on the program today. Guys, good morning.
Hi, good morning. Middle of the week and muddling along. That's what our markets have been doing. Actually, not just our markets.
You said middling along.
Muddling along. But the fact is that with so many tariff headlines coming through, markets are behaving as if nothing's really happening. I mean, no matter how high those numbers are, some are as high as 40%. Markets are just doing their own thing as if it's just another day in paradise.
But that's exactly what it is, right? Just another day, because that's what Donald Trump's commentary is all about. He could say 40%, 50%. You remember the times when US and China were embroiled in this 118, 140, those absurd numbers. And everyone's now coming to terms with the fact that these are just conversation starters more than anything else. The good part is that yesterday, the last hour, the recovery that we saw on the Nifty, that up move that we saw, so to say, at least brought some excitement to an otherwise very, very feeble sort of market.
You know, normal people, when conversations are, normal people say, well, you know, let's catch up for a coffee. President Trump says, well, let's start with 100%.
140%. I think that's a good conversation starter. That's what I'll do to my friends. I'll just randomly message them, hey, you owe me 10,000 rupees. And then that person will at least reply.
All right. Well, let's just take it from the top because there is, there is a lot. Not very much in terms of the market. So the market was absolutely quiet. You know, the noise to signal ratio, if you can put it, I think it's got to be at a bit of a peak right now, right? I mean, so much noise, but how much of a actual signal, real takeaway from a lot of what we're hearing from President Trump, etc., is there? I think that is entirely very much debatable, and that is, I think, a crucial point. Ignore the noise and look for the signal out of all of what is coming through. So global markets were very, very quiet. S&P ended about 0.07% lower. Trump essentially said, he said a lot, but he basically said that there would be no more extensions past the 1st August deadline. But, you know, we'll see. He's essentially, of course, also said yesterday, we played those sound bites out that, well, we've made final offers and the 1st of August is the new deadline. I mean, the tariff rates, of course, broadly are similar to what we saw announced on the so-called Liberation Day. Now, Trump called for a 50% tariff on copper imports, 50% on a commodity which is used every day in pretty much everything. But you know, it's that's what it is. The point, though, is the timelines for this are uncertain. I mean, will this be done, by in the next couple of months? Will it be postponed after that, etc.? But of course, I mean, prices. Copper futures were up 17% at one point. Intraday, it's the largest gain intraday since 1988. But then, of course, they cooled off. Lastly, I think because of this uncertainty around implementation timelines, they were up about 10%, still very, very large as far as copper is concerned. And the other thing, which I think audiences here in India would also be interested in, is pharma. So he said that he would offer pharma companies at least a year grace period, that is 12 months, at least 12 months, before applying a crippling 200% tariff on foreign-made pharma products. 200%. But the thing is this, right? Trump was elected when? In 2024, late 2024. We're in 2025. If these, tariffs are, according to President Trump, going to come into effect at least 12 months out, we are talking about 2026. I mean, sometime in the middle of 2026, maybe a little later, in terms of implementation. Now, you know, it's a 4-year term for President Trump. He cannot run for another term in that sense. So actually, you know, in a counterintuitive way, it looks very, very bad. But obviously, we will not see, new investments, etc., in the US because of the uncertainty around the tariffs, etc. But the point is, in a counterintuitive way, does this actually remove some of the overhang for Indian pharma companies as well? Because he said, 24 is gone, 25, 26, and then maybe, 1.5 odd years. And of course, that also is not very clear. I think he said 12 to 18 months, but at least 12 months. So I think keep an eye out on some of these names. But there is, of course, no rush. It's not as if there is any big trigger, a tailwind apart from this for pharma companies, and this was kind of capping gains. So remember that. But in a broader sense, the way I would put it is, stocks should not fall. I think if anything, you should look at it from the other side. Now, Trump, of course, also repeated his BRICS warning, which is the grouping of countries. He said that traditional 10% tariffs for just being in BRICS. This is something he said talked about earlier as well. He also spoke about EU, China, sectoral tariffs. A lot of this was sort of said earlier, so I'm not going to go into details and repeat many of this. Now, markets globally in a bit of a wait-and-watch mode. Indices have done extremely well. US markets, for example, remain less than 1% away from all-time highs. So it's not as if they've been damaged at all. If anything, the other way. Oil prices $70. So there are reports that Yemeni Houthi rebels are attacking commercial ships. This was a Bloomberg headline. There's also reports that President Trump and Netanyahu, the Israeli Prime Minister, are meeting privately. The agenda is unknown. So again, to keep the Middle East, I think, at the back of your mind, it's kind of sort of faded into the background after the ceasefire between Israel and Iran. But oil, I think, is the one thing you will see as an expression if the markets start to get worried again. Just to tie in the levels, they're not changing very much at all. Yesterday, in the last hour, we saw a sharp spike higher for the Nifty Bank, but it was a sensex expiry yesterday. So I think you will see some action at least. Nothing like what we used to see earlier. So the support 25,331 on the downside. The resistance comes in at 25,669. For the Nifty Bank, the support comes in at 56,838 and resistance comes in at 57,628. GIFT Nifty will give you a quick sense of how we are likely to start. It's neither here nor there kind of start, about 24, 25 odd points lower. Surabhi.
Yeah, I guess, Prashant, we'll only know in hindsight, right, whether the market got this one right as well, like it did COVID, because the market kept rallying through after the initial dip. The only time the market got it wrong was the global financial crisis, because the market couldn't guess that the financial market itself was broken. But otherwise, the markets have usually called things right. So let's see. Maybe that happens once again, because if you go by market reaction, there's nothing dramatic. President Trump is talking about all these tariffs on countries ranging from 25% to 40%, 50% on copper. Look at the market reaction. It could be just another day, as we are saying. That's what's playing out. In the Hong Kong market, there's some more pressure. That market's down 1%. We've got data out of China this morning. Deflation in China is still a problem, especially at the wholesale level, because look at the producer price numbers that have come out today. The decline is 3.6%. The expectations were for a 3.2% fall. And this is continuing. This is the biggest decline in producer level inflation that we've seen in 2 years in China. There's some better news on the consumer side, because consumer inflation has picked up after 4 straight months of decline. The CPI number is up 0.1% for the month of June. So that's China data. Now, coming to the copper levies, 50% levy on copper. Just some stats to keep things in perspective here. The US imports 50% of its copper requirement. Bulk of those imports obviously are coming in from Chile. They have the biggest mines, on planet Earth. And now with the 50% levy on copper, steel, aluminum, and copper, all the 3 key metals are at the same base in terms of tariffs, which is 50% plus. So we have to see how this is digested. The copper price itself was rallying 13-14% yesterday. Some of the copper miners which are listed in the US, like Freeport, that stock was up about 5% as well. So he spoke about this 50% tariff, and then there was this big scare of 200% tariff on pharma imports, maybe the next 1 year. Let's actually listen into that precise soundbite, and then we'll take it from there.
Ones we did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out.
Why don't you announce copper?
And we did cars. And now, today we're doing copper.
Copper and lumber. What would that tariff be on? The sectional tariff?
I believe the tariff on copper, we're going to make it 50%.
50%.
And we'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%. We'll give them a certain period of time to get their act together. But they were all here, now they all left. They went to other places because we allowed, people that sat in this room allowed it to happen. And I don't allow it to happen. The people in this room don't allow it to happen.
I also went on to say that the people in that room and the ones who were running America were stupid people. It's classic Trump style. But anyway, now we'll talk more about this in just a bit. Let's talk about the flow situation as well, because the market's been absolutely comatose over the last couple of trading sessions, barring yesterday's last half-hour move. That could be in parts attributed to the fact that it was weekly sensex expiry. Look at the fund flows. FII is on the edge. I mean, basically sitting on the fence. 26 crores of net buying coming in. Domestic institutions bought stocks, cash stocks worth over 1,300 crore rupees. Today is a very important day. Again, we have the monthly MF flow data coming in. Remember, in the previous month, in May, the equity inflows had dwindled to under 19,000 crores. So keep that in mind. Let's see if there's a pickup or not. But the markets become so range-bound that maybe people are looking for other alternate avenues or not. So today's number becomes very important. It's been a continued declining, streak of flows falling in equity funds. So let's see if that changes or not. Stocks and sectors in focus. I'll keep textile and apparel on the radar still. Some of these stocks were up and about yesterday because we still don't know. The hope is that despite this, BRICS tariff that he's talking about, another brick in the wall, so to speak, 10% breaks. If we continue at 10%, then we'll still be maybe competitive with Vietnam, with Bangladesh. So let's see. The pharma index for sure, though he's talking a year out in the future in terms of this 200% tariff. But let's see if there's any volatility on pharma stocks. Tata Motors wholesale numbers are out and the sales are down 9%. And Union Bank of India, really weak performance for Union Bank. Advances are up less than 7%. Deposits are up just about 3.5%. So not too great. So let's see. We'll watch what's on these stocks. Mangalam?
Well, we've been talking about how the market is absolutely range-bound. So I was just looking at the Nifty high minus low over the last 1 month or so. And guess what? If you just look at the range that the Nifty has been trading in, day before yesterday was 82 points. Yesterday, despite the up move that we saw, all of 123 points. And for an index which is upwards of 25,000, 200 points is less than 1%. In fact, over the last 1 month or so, the average traded range on the Nifty has been 195 points, with the highest being 350 points, which is 1.4%. So that's the kind of market that we've been in. Nifty hovering between 25,350 to 25,650, give or take 20 odd points. Despite the up move that we saw in the last hour yesterday, the Nifty added all of 61 points. The good part, however, is that two large parts of the indices, both the Nifty Bank as well as the IT index, did well in yesterday's trading session. The IT index will be in focus ahead of IT sector results. And at the same time, this index is also fairly off its highs. The broader markets, they were under a wee bit of pressure in yesterday's trading session. Yes, there was a recovery in the last hour, but Nifty, Next 50, mid-cap index, small-cap index, all of them ended lower. If you look at, the overall futures position by the FIs as well, they sold about 268 crores. They've been managing their net exposure fairly well over the last 5 or 6 trading sessions. They added about 4,100 longs, added about 4,100 shorts and 2,800 longs. If you look at the FII exposure over the last 5 days, you'll be surprised because nothing has changed. 29, 29, 28%, 29%, even as their net exposure has moved more towards the short side. But because of the up move that we saw yesterday, a lot of the call writers got taken out. So 25,400 call saw 10 lakh shares being unwound. 25,450 call also saw about 10 lakh shares being unwound. So a large part of the up move that we saw yesterday, while it was sensex options expiry, we saw some of these Nifty option writers also cover their positions. And as they did that, the put writers got into action. So 25,500 put writers and the 25,550 put writers increased their positions. And 25,700 call writers actually went ahead and did some punt buying. So if the market were to break out beyond the range of 25,650, then perhaps there could be an up move, is what these punt buyers are betting. The good part is that, the range seems to have moved higher from 25,350 to around 25,450 at the lower level. And resistance too has moved about 50 points higher to around 25,700. That's about the index. The stocks that I'll be watching out for today have to be the paint stocks, Asian Paints as well as Berger Paints. Why do I say that? Because on the day AkzoNobel and JSW deal was announced, paint stocks were buzzing. We had spoken about 4 or 5 reasons why. The demand sentiment is improving, raw material sentiment is more contained. The stocks have already seen a decline, and more importantly, people are now sizing up competition. Since then, there have been a couple of brokerage upgrades. ICICI Securities turned positive after 4 years, and today we have Goldman Sachs as well as Jefferies and HSBC, all of them turning positive on the paint space. So my sense is that if the consumer sentiment has to improve and staples are doing well, why not paints?
Okay, all right, Mangalam, got it. So paint stocks, some positive cues and voices finally coming through. Well, let's kick it off then with the equity call of the morning. And this one's coming in from Rupal Agarwal of Bernstein, who says earnings revisions was the best performing style of 2024. She means in terms of stock picking. They have been waiting for this style to become attractive again. She says earnings revision is the only factor to be reasonably valued on absolute basis and be one of the cheapest relative to the market. More importantly, the portfolio, she says, is showing signs of bottoming on earnings downgrades after reaching extreme levels on both absolute and relative basis.